All right. Hey, everyone. Welcome back. Today is Monday. Hey, James, how are you? Good to see you. All right, no problem. So let me explain how this, if you're new to the stream, let me explain how this works. So first thing I'm going to do is we're going to go over the economic calendar real quick. There's really only one important thing to really mention this week. So that's pretty obvious. Then we're going to get into the charts. I'm going to go over Bitcoin, right? My Bitcoin update here and a few other things. If you have a market you'd like me to check out, place it in the chat, type it into the chat, and I'll get around to that, right? And then we'll also use the Trade Scanner Pro. And we'll look around and see if there are any signals that make sense on these time frames in terms of the Trade Scanner Pro. Hey, Mohammed, how are you? All right. So anyway, all right, so let's get this thing started. First thing this week, as far as the economic calendar goes, there's really only one event that we should be paying attention to, and that would be the FOMC meeting. Okay, so the FOMC is on Wednesday. That the announcement comes out at 2 p.m. Eastern time, and then you have the press conference at 2:30. Now, this is going to be the most important event, no matter, I mean, there's other things on the calendar, but they're not going to be as important as this. Now, in this event, of course, he's the Fed chairman is expected to announce a cut of 25 basis points. This has been priced in. This has been talked about for months. This is what's expected. Okay. Now, there's a chance that he cuts greater than that, right? So it's a smaller chance, but if he does it, the market is obviously going to like that. Now, the market has been making new high after new high. If you looked at Nasdaq today, 24,250. I mean, it's ridiculous. Okay, it's ridiculous. It just doesn't pull back at all. So anything can happen going here into the FOMC. But here's the thing with the FOMC meeting. Hey, Kai, good to see you. That meeting, it's really going to be the key to that meeting is not going to be the rate cut itself. It's going to be what he says at the press conference. They ask questions, they have reporters ask questions, and the way he answers the questions is you could see wild gyrations in the market. Now, just going back, if you think about the previous meetings that he's had, okay, if you just go back the previous few months, he pretty much says the same things every time. He uses the same language, the same words. So based on that, I would imagine that Powell is not going to upset the markets, right? He usually does not do that. So, with that being said, I would expect, the 25 basis point cut. If he cuts any more than that, then you're probably going to see an initial spike. But that may also be taken in a negative way. I don't know. There's no way to know this in advance. If he cuts, 50 basis points, for example, people will say, oh, the economy must be worse than he thought or whatever. Or they may say, well, he's just making up for the fact that he had bad employment numbers for going back till June or going back till May. The guy was making decisions based on bad numbers. So I don't know. It's going to be up to the market to interpret that. So the way to go into that, for one, is it's probably unwise to go into it with swing trades, especially if you have profits in your positions. It's probably a good idea to wait until after the meeting, right? Or take your profits or reduce your profits or whatever. Reduce your risk going into the meeting. Now, going into the meeting, I would expect a lot of indecisive movement, okay, across all the markets, especially like tomorrow, right? Today we had a little action. We'll talk about that as we get into it here. But then tomorrow, and especially Wednesday before the meeting, I don't know, probably not good times to trade. What's frustrating about that, if you're a day trader, is it always seems like the market has some excuse not to trade, right? And you go on like a whole week, like Wednesday, half the week is over. So you got to wait till Wednesday for like meaningful movement. So it's tough. If you're less experienced, I just think it's better to avoid, or look for swing trades, maybe smaller, maybe longer time frame day trades. Like for example, instead of using a 1 minute chart, perhaps you wait for trades on a 5 minute chart if you have the luxury of doing that, right? So things like that. Just be more selective with your trades until after the meeting. After the meeting, then we should have some insight. We should have some perspective from Powell, from the conference, and the market should perhaps start to have more of a decisive look to it, because again, we're still in, we're still not out of the low volume period. We're getting out of it, but we're still generally not out of it. We usually return back to normal volume in November. Like when I say normal volume, I'm talking about big move type of moves. 200 points in the Nasdaq in 5 minute type of moves. That requires a lot of volume, right? So usually you see that back like starting in November, usually, right? That's when you get to the height of that type of season. And that usually goes along until April, right? Anyway, all right. So let's get into the charts. Again, if you have a chart you'd like to talk about, please share it in the chat. It could be a stock, it could be whatever. All right, a coin, whatever, and we'll talk about it. So, as you know, what I'm looking for here, we're looking at market structure and we're looking at support and resistance levels. Now, one thing I want to mention before I get into the details with the charts here, one thing I want to mention is, I spend a lot of time watching YouTube videos because I'm looking at competitors. I'm looking at all the new content that's coming out, a lot of these new content creators with small channels. I'm very interested in them because I like to see how they progress, right? What they're talking about, if it's getting traction and all that stuff. And I notice there is just no shortage of new traders coming out claiming that they're all profitable, right? All of them are coincidentally profitable. And we're not talking about, older guys here. We're talking about young kids. We're talking about and they're in their early 20s. And okay, cool, Kai. Well, thanks for sharing. I'll take a look at that. Also, if you want to share what city or what country you're from, that's always a fun fact. Hey, Axel, how are you? Doge, sure. Okay. Well, yeah. I mean, if I have time, I'll take a look at both. Usually, I ask one symbol per person, but I don't see a lot of symbols there in the chat, so I most likely can do both. But so I was saying, I've been noticing more and more and more of these traders, right? Some of them, they may not necessarily be fake gurus. It really depends. Some of them are saying, hey, I'm new and I want you to join me on my journey on learning how to become profitable. Other ones are just coming out and straight up saying, hey, I'm a profitable trader and I figured it out in 1 year. And eventually they're going to come up with some kind of training or join my mentor group. And I have a seat available, click on the link in the description. So I'm like, man, there's no shortage of that nonsense. So the reason why I bring this up is because I found a guy who I'll mention I believe his channel name is Quant Guild, like when you join a guild, Quant Guild. And what I like about this guy, he has a relatively small channel, only like 35,000 subscribers, which is relatively small. But what I like about this guy is he's a quant finance guy. He's a quant trader. And now he claims that he's worked for institutions deploying, algos and stuff like that. And yeah, Kai, it's utter nonsense. And whoever falls for that, I mean, really, you deserve what you pay for. You deserve to lose all your money if you believe some 20-year-old kid has figured out how to conquer the market, right? And they're making millions of dollars, or they retired after 1 year. Yeah, okay. So my point is, I found a guy. Like, if you want to find a guy and you really want to learn like how this game works, especially if you want to be a day trader, because this is very specific to day traders. I found this guy Quant Guild. He doesn't really ask for money. He asks for donations, and I think he's developing a site or something for training. But here's the thing: it's all quant finance. So this is something that, like I was saying, he claims that he worked for an institution and this and that, whatever. And I have no way of proving that. But one thing that is pretty clear is his math, right? And math numbers usually don't lie. Like he's showing like what I found most interesting, and I want to share this with you guys, is he shows these simulation graphs, where I guess these are Monte Carlo simulations, right? And he shows a population of 100 traders, and it simulates the trades based on three types of systems, right? One system is a negative expected value, meaning this is the type of pattern or performance that you would see if you go to a casino, because the casino always wins, right? So when you go to a casino and you play a casino game, it has a negative expected value. Over time, you cannot win, right? You can win randomly, but over time you cannot. So he compares that to a zero expected value, meaning you're breaking even after cost, right? So no expected value. And then he shows a system with a positive expected value. Now, keep in mind, positive expected value means you could be up $1, right? You're positive. That's a profitable trader, right? So he shows the paths over a specific period of time. Here is the interesting part. In the negative expected value sample, there are positive traders. It's just a coincidence. It's part of the population. There's a small group of positive traders. In the positive expected value, right, you have the greater percentage of the population are profitable, but you also have a group of traders losing money. That's a positive expected value. That's a winning system, a statistically proven winning system, and you still have a population of losing traders. Okay, because things just happen coincidentally, not worked out for them. That's the reality of this game. So his point was, with the zero expected value system, right? Half the population was profitable, the other half wasn't. These fake gurus, as he was basically suggesting, either are having a coincidental random run or just a winning streak that's temporary, or they're outright lying. And I agree with the second part. They're lying, because there's no way all of these fake gurus could be having a coincidental random run. So my point is, this game, my point on this whole thing, and why I found that very useful and enlightening. I mean, I generally knew that, but what I like is he shows it mathematically. He shows the actual graph, with the Monte Carlo sample, and you can see the equity curves, right? 100 of them, and how they go. So that is very important for a beginner trader to see. Very important, because that helps you realize that the random run that you may be in is nothing more than a random run, and you're not profitable. And you're less likely to believe these clowns who claim that they're making all kinds of money, when chances are they're lying, right? So anyway, if you want to follow someone, that's the kind of person you should follow. Okay, that's who I would suggest. Alex from Romania. How are you, Alex? He even knows what I'm going to say. I love Alex from Romania, because I like saying that word. Romania. How you doing, man? Good to see you. So that was my little rant on, you know, fake gurus and real gurus. Like this guy, Quant Guild, I respect the guy. He's a young guy, but he speaks from a math perspective. If you're not a math guy, you may have a hard time following his content, but you should at least try. Because if you want to compete at the day trader level, that's where it's going. I strongly believe in the future, retail is going to be more like this guy, right? And less like these clowns who sit there and say, hey, the only strategy you need to know to make $1 trillion a day, and it's a candlestick strategy or opening range breakout. It's the only one you need to know, right? So I believe in the future, it's going to be less of those guys. And if you're one of these people, like, is there still room for a guy sitting in front of your computer? Yes, but I think there's just going to be less of them, and you're going to have a lot of experience. These people that are telling these lies about you're going to be profitable, follow my system, join my mentoring group, they're just fools, and they're just going to lose all their money, and they're just going to quit. That's the reality of the game. So don't be one of them, okay? I would recommend lean toward, if you want to be a day trader, even a swing trader, lean toward automation, lean toward quant finance, learn the statistical view of the market. Just learn that stuff. It can't hurt you. Okay. It's only helpful. And again, I'm not a math guy. Okay. When I see those math equations with all those Greek symbols and stuff, I have no idea what I'm looking at, but I try to understand. I make an effort, because that's where I need to be growing, because that's not my area. That's not my strength. I have a lot of market experience, and I understand the market on an intimate level, but on an anecdotal level, I can't prove things with math, so I would like to be able to. And now I notice more and more information is becoming available to do that. especially with AI and stuff like. You can ask AI so many detailed questions about that quant finance space and find out things that otherwise you'd never find out. You're not going to find it on YouTube unless you find these specific quant finance guys, and they're rare. So I found this guy. I like him. So anyway, Quant Guild is his name. Check him out if you have a chance. All right. Anyway, so all right, yeah, Alex. So we got that FOMC. I talked about that just at the start of the stream here. So I think that's going to be definitely a potential catalyst for some wild movements here. So let's get into the chart, shall we? And I'm going to start here with Bitcoin. Now, I wrote my analysis. I published it like at midnight or a little after midnight because I was occupied yesterday and I wasn't able to do it on my regular schedule. So, but I still managed to publish something. It was short, but it was something. Now, when I published it, the candle actually was an outside bar. The candle was full when I published it. Okay, the candle looked like this. It was a bullish engulfing candle. That's why in my title I wrote bullish engulfing setup going into the FOMC. Now, oh cool, Kai. Yeah, Kai, you would appreciate him. I think you would appreciate this guy, especially because I know you lean more on that side of things. So you'll definitely appreciate this guy. And as you guys know, I'm not one to be promoting other whatever, right? But I thought the guy's content was truly valuable, and he also feels the same way I do about these fake gurus, and that's why he made that one of his most recent videos was comparing, like looking at some of these fake guru titles and then showing us the population of the Monte Carlo populations. So I like that. I like the math because that's what this game is all about, and that's where the industry is. Right. And that's really, if you want to know who makes money, who really makes money, and how they go about really making money, that's who you should be following, not these frauds who anyway, all right, I'm not going to repeat that whole speech. But anyway, cool, Kai. I think you'll like the guy. I really think you'll appreciate his content. So anyway, so now this candle, it was a bullish engulfing candle at the time. I'm surprised to see it give it all back, but hey, that's the nature, man. That's random. That's what we're in. Now, this is still an outside bar, okay? It's still an outside candle. So the bullish argument, even though this candle looks like a pin bar, a bearish pin bar, don't be so quick to judge, because this structure, and this is what I was pointing out in my article, this structure starting from here, right? We have a little mini impulse wave here, right? This is wave one. We have our little wave two pullback. Wave three is pretty clear. And these red candles right here, as you can see, that's most likely a wave four. We're talking minor waves here, but we're nowhere near overlapping wave one. So if this is an impulse wave, then we still have some room for a little mini wave five. Now that negates my B wave idea. So the week before, I was talking about a potential B wave where you get your A wave, which was the initial pullback here, the first initial pullback, right? Followed by the B wave, which is the bullish, the retracement, which sucks in all the longs, and that's often followed by the C wave, which is usually a dramatic bearish corrective move, right? Now, the B wave structure is typically three legs. Right now, we can argue that this is three legs, but there could also be an impulse here. So it can't be both. It's going to have to be one or the other, right? But the market has to decide that. So right now, if this thing finds support and stays above that 113K support, then I suspect we're going to test 118 or 120. And that can easily happen with a catalyst like the FOMC on Wednesday, right? So that's why I'm pointing that out. Now, with a chart like this can be very confusing. Like, how do you make a judgment on this? It's very hard to do. So you could look on the smaller time frames, like on the day trade time frame, and you can find minor supports maybe because the general structure is bullish. But if it starts breaking, like today's low, for example, which is 114,395, if this thing starts pushing 114, then it's probably on its way to that 113 support level. that can be helpful if you're looking for day trades. But if you're looking for swing trades, are you going to short this? This is kind of tough and to short, in my opinion, because if this is a wave 4 pullback, you potentially can get caught in that wave 5 leg going higher. So when you're in, like, if it's confusing and maybe you're in doubt, stay out. Just avoid. Wait for the support. If you're looking for longs, wait for a test of support. Wait for a confirmation at that support before doing anything, right? Because again, this still may turn out to be the B wave, but it's still too early to tell. This current candle, the way it's forming, I really can't say much about it. It's an outside bar. The next candle may be a green inside bar, and then this thing may continue higher, like my little line suggests here. All right, does that make sense? So I believe that the event will be the FOMC that's going to decide. And I suspect over the next day, like from now until all day tomorrow, this thing's probably not going to be very decisive. And we're probably going to see that across the board because of this highly anticipated meeting on Wednesday. Does that make sense, you guys? So sometimes it's just worth it to wait. Like right now, like if I was long, I'm not long. If I was long, I wouldn't be too happy about this candle. But at the same time, I wouldn't be quick to get out of it either, because this candle may be the higher low. The low of this candle may be the higher low. We don't have a dramatic straight candle. We have it's an indecisive candle. It's a doji-like candle. It's a pin bar, but look, we also have a pin on the bottom too, right? So it's indecisive. It's indecisive. Does that make sense? So, I mean, there's not really much more to say about Bitcoin. Support is 113K. If we hold, we may not touch 113. We may hold before then, right? If we hold, I would be watching for 118 to 120. If we break above 118, 120, we break above that, maybe the meeting is enough of a catalyst, or maybe Thursday, Friday, we see this thing pushing. If we start to push the highs, what that tells me is this entire corrective move that I suspected was, the party's over type of move because of the overlap that we talked about over the previous weeks, that would be wrong at that point. If we make a new high, that overlap idea is canceled out. And that means that this is a wave that was a wave 4, and the breakout would now tell us that we are in the wave 5. It would confirm it. So this leg that we're looking at here could be the beginning of wave 5. But there's no way to know until it breaks out, if it breaks out, right? So that's why you have to keep an open mind and you have to adjust when it comes to the wave counts. That's why I'm very loose with the wave counts. If the map, it shows me a roadmap. If the roadmap changes, I adjust. If I'm wrong about the overlap and this is a wave 5, then I go back to my old scenario where I anticipate the 130K, right? That's where I suspect the wave 5 can go to, maybe higher. But one inflection point is that the low 130s. But right now, I'm not anticipating that because we haven't proven anything yet, right? We may touch 118 or 120 and fail and then go lower again, right? And that would not be a new high. So that would not be the wave 5. Does that make sense? So you see how that works, right? The market has to make a decision and then we have to adjust. UTXO, if Bitcoin breaks above, there will be, yeah. And it's going to go there. If you ask Michael Saylor, it's going to go there. All right. It's going to go to 10 million, trillion, billion. It's definitely going there because it's not even, based on what he said, it's not even a question. It's a certainty. It's a certainty, as he says it in his little mousy voice. It's no longer a question. It's a certainty. Bitcoin is going to go to 100 million, trillion, billion. I can almost guarantee it. And if you click on this QR code, I will double your Bitcoin. Just click on it and send me your Bitcoin. This is not a scam. All right. So anyway, that's my Michael Saylor impression. So that's Bitcoin. Let me know if you have any questions. All right. And UTXO, don't think I don't forget. When I was signing off on my previous stream, he put a funny comment. Where's the luxury car? He put something like that in there. And I would say it's coming. I have to rent it though. I have to rent it, and I have to rent a girl to come along with it. I can't have a car with an empty seat, man. I gotta have a girl and she has to look good. So I can't get one of those on my own. I'm gonna have to pay for it. So yeah, you like that, Kai? I know it sounds just like him. Yeah. So I'm sure he would not appreciate that impression. So anyway, yeah. So that's Bitcoin. Let me know if you guys have any questions about that, or if you have any. Maybe you don't agree. You know, yeah, you like that, right? Yeah, I watched. I only had to watch him one time to pick up that impression. I watched him when at the Bitcoin conference when he was doing that ridiculous speech that Bitcoin's never going to go to zero and blah 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 blah, and he had that QR code. I'm like, who would actually send him money? I don't know. I just found that to be very strange. Anyway, I only had to watch him one time. He's pretty easy to imitate. So let me know if you have any questions, or if you don't agree, let me know, because that's the whole point. I'm not going to get mad or anything. We're here to debate these things, right? We're here to talk about these things and maybe other points of view. But that's my point of view on Bitcoin, and it's purely technically based, right? I'm using technical analysis here to arrive at these conclusions, right? Another thing I'll mention about Bitcoin is the 123. This is my next resistance, as you can see. I drew a horizontal line there. That's a new line that I put on the chart because of this price action back here, right? And if that happens to fail in that area, that could be a head and shoulders pattern, possibly. I don't put a lot of weight on those patterns, but it's just worth noting. All right, so let's move along. I'm going to now move on to, we'll take a look at the stock market real quick. We can do the Nasdaq, or we can do the S&P. Which one do you guys want to see? The Nasdaq or the S&P? They're essentially the same. Which one would you like to see? Any preference? Does it matter? Because if it doesn't matter, I'll pull up the S&P. You know why? It's the same thing. And the S&P usually is a little more stable. So it usually, in my opinion, just carries more weight. Also, the S&P, yeah, okay. So we have a NAS and we have an S&P. All right, that's even. So do we have someone else to vote in on that? Do we have one more person to pick? Because, I mean, right now you're at 50-50. One guy says NAS, one guy says S&P. Anyone want to come in and add to that? S&P. Okay, Grego. All right. Well, just to say, the Nasdaq, it's the analysis that I give you for the S&P, it's going to be the same thing. You can apply it to the Nasdaq. Okay, S&P, no problem. So let's go to let's see. We can go to, we'll do the futures chart. How about the futures? ES1, right, which is the mini futures. ES1 just gives us a little more granularity, because we have like the overnight data. S&P. Okay, no problem, Alex from Romania. So here's the S&P futures, right? Again, you can apply this to the SPY as well. This is just going to be a little more clear, because again, we have all the overnight data, right, on the futures chart. So I mean, look at this. And everything I say about this, by the way, will also apply to the Nasdaq. It's the same. They follow each other. The S&P is heavier. The S&P is 500 stocks. The Nasdaq 100 is only 100 stocks, right? So they follow each other. It's just the S&P carries more weight. Let's talk about this. Now, I've been talking about the S&P in recent weeks. I talked about how I want to buy the S&P. I want to be long, but I am not buying this. Look at this breakout. So we have this, notice this, we have like this triangular pattern here, right? If I draw like these, see how these lines converge? So when it comes to like wave counts, that's a particular type of pattern. And it usually establishes a top. It's usually what you see before a corrective move. Now, it doesn't guarantee that we get a corrective move, but it's something I notice. Right, UTXO. That's the fundamental reason behind it. We're not growing because of economic growth. We all know this. We're not growing because of whatever, right? We see nothing but red flags. We see nothing but problems. We have a frozen labor market, right? All this other stuff. We have inflationary blah blah blah, and we have the Fed cutting on Wednesday, right? Okay, so we're like in clown world here, and so my point about something like this is wild, and you're going to see a lot of mainstream news Hey, new highs on the S&P. Hey, all-time highs. We're all having parties here. My stock portfolio is going up. I'm so happy. Right? You're going to see that over and over, and you're going to be like, it doesn't make sense. Right? It doesn't. And, I can tell you back in '07, back in '06, '07, I saw the same thing where there were red flags. Back then, people were reporting a lot of stuff on blogs, and the market was just making new high after new high after new high. And this went on for like 2 years. Okay. And it made no sense. Now, back then, I had a lot less experience. So I used to do things like short the Dow because I'd be like, oh, it's too high. It's too high and it can't keep going up like this. Usually when you do that, it's too early. And I was definitely too early. Okay. But the point is, don't question this. Okay. Don't ask why. Don't ask the market why, because it's going to lead you through a very confusing time. Sure. Hey, Alex, I don't know. We'll take a look. I think they reported something, haven't they? I don't know. We'll take a look at the chart. But so my point here with this, the key takeaway is don't question it. Just the only question you should be asking is, which way do you want to go? You want to go higher? Okay, I stay out of your way. If I don't agree, I just stay out of your way because the market's always right, right? Even though this doesn't really make sense. But if you look at it from the inflation perspective, well, yes, when your currency is losing all of its value, assets rise, right? So it costs more dollars to buy S&Ps. It costs more dollars to buy gold. It costs more dollars to buy whatever. That's usually what happens when your money is becoming worthless. And it just looks like every step that we're taking, fiscally, every step that we're taking seems to be. Oh, is that what happened? That's interesting. $1 billion. That's it. The guy's worth 420 billion, and that's all he buys is $1 billion. What's wrong with him? And he buys it at the top of the market. I don't know. The guy's supposed to be a genius, man. What's up with that? I don't. We can't we can't. We don't know what's going on the inside, so it's hard to make sense of moves like that. But my point is, when a situation like this, and you're looking at it from a technical perspective, don't ask why. Just ask where. Okay, where do you want to go? You want to go higher? Okay, no problem. I stay out of your way, right? So what to do here? Well, for me, I want to invest. I'm not going to buy the highs. I'm certainly not going to buy the all-time highs. I've been saying this all the way back the entire summer. And you could say to me, you can argue and say, you know what? If I listen to you, I'll never make money because I'll never buy these things. And they keep going higher and higher and higher. Well, it's all going to depend on how much risk you want to take. I refuse to take risk in something that refuses to pull back because I know that as soon as I buy it, I'm buying the top. Okay. Right. Yeah, I know UTXO. Well, yeah, if you want to believe that narrative, sure. And I know you're being sarcastic, but yeah. Now I know people like there's a whole. If you really research that stuff, it's kind of easy to put the puzzle pieces together of what the truth is. A lot of these guys are not the genius. The propaganda that we're fed is not. It's propaganda. It's not real. Okay, it's not real. You know, on how these success stories, a lot of them are embellished. So anyway, yeah, funny that you mentioned that. So what to do? I'm not buying anything here. I want to see at least, if anything, a support level. Our first support level on something like this is here. Okay. I talked about this before too. So we have what 65.25. We have another support level just below that in this area here. Those are our support levels. That's it. So if you're buying in S&Ps, now how to put those support levels into perspective? As an investor, I don't think those are attractive support levels at all for an investor. As a swing trader or even a day trader, those levels can be meaningful. All right. Because we test one of those levels, that would be a good place for at least a bounce attempt. So you can at least be prepared for an attempted bounce rather than shorting it at that level, which a lot of people will probably do. Right. Especially if we make it to the lower one, if we get to this one, which is what 63.78, around there. Remember, you can round these numbers to 63.50. That would probably be the more appropriate number. But if we start pushing 63.78, remember, these are on the futures, you know, that would be a good place to anticipate reversal patterns of some kind, right? It could be a candlestick, it could be another type of reversal pattern, but that's where you want to be looking at these support levels. And as far as investing goes, now, with my one share idea, if we were testing something like a 63.78, okay, one share. I could do one share there of a SPY. Okay, one share a week, one share, every other week, 2 shares a month, or 4 shares a month, accumulating near these support levels. If the market were to offer that opportunity, that's where I would do it. That's where I'd begin the program. And then, you're looking at levels like this over here, which is what, 61, 60, so like 61.50 area. That would be even way more attractive as you start testing these old resistance levels, right? Those are areas you want to keep in mind. But for the near term, I would be looking at these two that I just removed from the chart. Does that make sense? But as far as right now, this moment, if you were a day trader, hey, sure, work on the long side, but I would not be sitting here expecting this thing to just keep running in a straight line. We're likely to see, and the FOMC, if anything comes out wrong that day, if the market doesn't like something, this thing is vulnerable. Okay, does that make sense? Here, dear, Ricky. Hello, Ricky. Huzzah! Have you seen that commercial with the English muffins, with the English guy? Okay. Oh, cool. Instead of hurrah, he said, huzzah! I love that commercial. They're like, well, how do you pronounce your name? Tom. What is it? Tom? Tom. I love that commercial. That's a funny commercial. The English Mushrooms commercial. Erdia! That's the English guy. I love that guy. Okay. Yeah. Right. Well, you have that too. Right. That can have an effect. Right. Week 3. It's all right. It's also the third. It's the quarter, the closing quarter or whatever. So you have that too as well. Right. So you can have effects from that. So I would just say, when you're at vulnerable levels like this, don't get carried away and don't think. I think all of you guys are my regular followers, so you guys know better. All right. But anyone new that might be watching, don't get carried away with this. If you're working as a day trader, keep it small, take your small bites, and be done with it. This thing can turn bearish pretty fast. It's not bearish right now, but it can turn bearish. And our first pullback can take us to these support levels, like this area right here. And that could take a couple of days to get back there, right? And all you need is a catalyst like the FOMC, the conference, for something wrong to come out. Or even if he says everything right, maybe the market, just the sentiment changes, right? Because maybe they say, oh, he's implying that the economy is much worse than he thought, or blah, blah, blah. And then it corrects out of nowhere. Just go back to the tariff drama, right? Go back to that. That came out of nowhere. That was a result of too much detail, right? Stuff that was known, but then when we shined the light on the details, the market got very uncomfortable. So that's how fast it can come about. So keep that in mind. Just watch. Yeah, I love that. I love those Thomas commercials. That old school, that Victorian British guy. So huzzah! So anyway, all right, let's move along. So that was the S&P. Let me know if you have any questions about that, or if you find that confusing, or if you agree, you don't agree. All right, so I'm going to move faster now and just cover a couple of the other markets, because I want to cover some of the stocks that you guys put and the coins you guys put in the chat. All right, without having to spend the entire day here like I tend to do. So let's go to let's take a quick look at the bond market. I got to throw the bond market in there because you got to pay attention to the bond market. Hey, Izzy, how are you? Good to see you. Thanks for stopping by. All right, I'm getting some of my regulars back here. It's nice to see more than just 5 people. All right, cool. So we're going to go to the weekly chart on the bond. These are the bond futures, right, which reflect bond prices, not the yields, inverse to the yields. We still haven't really done anything meaningful here. This is the weekly chart. We haven't broken this resistance, right? And we're nowhere near supports. So, I mean, this tells us that rates are going lower. If prices are going higher, rates are going lower, but we're up at a resistance. And also, if we break that, we still have like a resistance zone here. So, again, if we get a lot of dovish talk at the FOMC meeting, I suspect we can go into that zone, which means yields are coming off, right? The higher this thing goes, yields are coming off. That's what that means. And this thing, we're sitting at a resistance. So if I were just to trade this by itself and forget everything else, I would be looking for shorts. Okay, at this point, I would not be looking for longs or a breakout. I'd be looking for a bearish reversal here and looking to go short. That's what I'd be looking to do. There's nothing really there that confirms that right now. We had a bearish pin bar the week before. Looks like we broke below that pin bar briefly. So you could say there's a bearish setup is in play, but this green candle certainly doesn't support that idea, right? I'd want to see a continuation. Like this candle should be red. Today is Monday, so we still have the whole week and we have the FOMC. So this candle can easily turn red and start pushing red. So I would be looking for bearish setups up here, which implies, rising rates. That's what that implies. So I don't, again, that's not in line with what we're looking at fundamentally, but technically that's how I would be treating this. So just something to keep in mind. If you find that confusing, then just don't worry about it. All right. You probably don't trade bonds anyway. Just keep an eye on these bonds, because when one of these major levels breaks, that can be meaningful. All right. Whether it's a resistance or a support, it can be meaningful. All right, let's move along. I'm going to jump now over to, we take a look at gold real quick. Hey, Kai, you still in gold? So let's go to XAUUSD. I know Kai had some options. You had a nice, oh, look at that. Gold is just on fire here. 36.85 is the high on XAU. And there's nothing you can do with this now but ride your winner. That's all you can do. Not going to short this. I've been warning people about gold, not to short gold. Nice. There's nothing to do here but let it ride. This is the weekly, right? So let's go to the daily. Look at that. Look at today's move, right? You broke out, you had a little consolidation, and you broke higher. Like that's just, nothing to do but let the winner run. Let the winner run. You broke out of the consolidation. Your consolidation was the setup, and now the thing's running. So you had a pin bar a few days ago, and you're above the high of the pin bar. So that's a great sign. Let it run. That's all you can do. An aggressive thing to do would be to add here, but that's pretty aggressive. You're at like all-time highs. All right, so Izzy, cool. I had someone else ask about Doge. I'm going to get to that. I'm just running through my regulars here real quick. All right, so there's not much more I can say about gold. It's at all-time highs. We could take a look at inflection points and say, where can gold find some resistance? So I zoom out a bit. I go to my trend-based extension tool, and I find like a 3-point like formation, right? Like something like this. And then you look at the levels that come up, right? As a result, look, we're beyond that structure. We're way beyond that one. So I have to find another one, right? So how about maybe we got like this one in here. Let me see what I could measure. I could measure this one. Let's see this one. So this one, and a lot of these will overlap, right? So this one gives us some other levels to look at. You could see the relevance, like this was a relevant level, the 1618 at 14, what is that? 34.70. So you have a level at 38.61. That's a possible inflection point on gold, on XAU. I believe the futures value is even higher than this. This is the CFD. All right. So anyway, which is a reflection of spot gold. I have been selling gold put premium, but I took a lot. Oh, nice. Well, that's great. That's a great way to go about it. Selling puts on. Are you selling GLD? Okay, nice. That's a nice way to use time. Selling premium on the long side, selling puts. And it's wise to take your money, because this thing's pushing all-time highs. You don't want to get caught on the wrong side of that, right? But nice job there. That's a creative way to go about it. So nice job. All right, let's move along. I'm going to jump over to oil real quick, and then I'm going to move on to your requests. Okay, and I'll turn the Trade Scanner Pro on. So has oil really done anything? No, it's really out of play. Look at this. It's not breaking the support right now. You have a support right here in this area. It holds. Okay, oil is typically a measure of energy, like energy inflation. Oil is kind of stuck. It's not. It's got lower highs, but it's not making lower lows. So, I mean, what to do on something like that? It's buying it right now could be a little early. It's a little aggressive. If I was going to look for longs on oil, I'd want to see a resistance break first. So you have to give it some room. You have to wait. You have to be patient with it. Let it break that resistance, or you start with a smaller position here because this thing could still break the support, right? And it's funny with the dollar losing its value, right? Oil should be doing better than it's doing. So I'm going to just jump over to the dollar index before I go into the other ones, right? Let's just take a look at the dollar index real quick. I mean, look at the dollar index. It looks pretty bad. It looks pretty bearish. Okay, this is the daily, but even on this, look at the lower highs. We respect resistances. It looks like we're pushing support. The dollar looks pretty bad, right? Which explains, again, that helps explain gold. That helps explain the stock market. You would think Bitcoin would be doing a little bit better, but and oil, you'd think oil would be doing a little bit better, but they obviously have their own problems. But this dollar situation, there's really nothing too bullish about this. It looks like it's going to break those supports, and it is respecting resistance levels, right? So that's an important thing to keep in mind. And the FOMC can also add further insight to this. What he says at the conference, if this thing starts breaking all those supports, then you know what to expect out of the other markets, right? Because everything begins really with the bonds, and the bonds are just a reflection of the dollar if you think about it, because the bonds are the cost of borrowing money. What money? The dollar, because the dollar is still the reserve currency so far. Okay, sure, Alex. Neo, we'll add that to the list. All right. So let's move along to people's requests. I'm going to turn the Trade Scanner Pro on. Look at this. On the daily oil chart, there's still a short on oil. Look at this. This thing called short, what was it, back in July? This thing called it a short. I think that was July. Yeah. And this thing is on its way to the profit objective on the US dollar. That's interesting. All right. So let's move. I'm going to look at the chat here, and I'm going to go back to the requests from earlier. I think Kai had one store. Was it Store J? Let me just go back and see what you guys said. Hold on. So hold on, just give me a second here. I'm just looking back at the chat. I think it was Store J. It was a weird name. Let me just go back. I have a hard time seeing the text here. All right, hold on. Yeah, Store J. Got it. Store J, and then we have Dogecoin, Intel, Store J. Hold on, let me get the other guy. I think it was yeah, we'll look at that one. All right, if I know it was Intel and it was Doge. If I forget your coin or whatever it was, let me know. Maybe repeat it. Hold on, because I saw it here and now I can't remember it. Store J. Oh yeah, Doge. Okay, got it. If I forget your coin, just put it and repeat it in the chat so I don't forget. All right, so let's start with Store J. Store J. All right, we'll do USD. Okay. So let's see what we have here. Store J. This is Store J against Tether. Looks like the Trade Scanner Pro has a short, called a short on this again back in March. Wow. It's a long time ago, man. And look, it almost touched the profit objective, but never actually touched it, and gave you a few opportunities to get back into this thing over the months. Wow, this talk about a swing trade. So yeah, I mean, Trade Scanner Pro aside, this thing does not look really bullish. It looks sort of like the bond market, right? It's respecting resistance levels. You have a resistance level at this blue line here, which is the entry line, coincidentally. How much? What price is that? 33.57, right? So basically 33.5 cents. And you have some minor resistances. I don't know. If you're long, it doesn't look good. And you have your profit objective here for shorts at 2040, basically at 20 cents or 20.5 cents. What were you thinking on this, Kai? What were you thinking about buying this thing or something, or what was your thought? And also, so you guys who share the charts, the symbols that you want me to look at, also it might be helpful if you let me know like what you're thinking, like long, short, investment, whatever. So it kind of shapes my analysis a little bit better. Otherwise, I look at it by the way I would look at it, right? So maybe if you tell me what you're thinking, long, short, or whatever, I can give you something more specific. Like, so for something like this, I think it's a little too early for a long. I don't see, I see the higher low, but I also see lower highs. And I see resistances consistently respected here, you know? So I don't know what you're thinking on this, Kai. Let's see. I was thinking either it goes to zero. Oh, okay. So you're thinking investment, like investment long. So let's, excuse me, let's take a look at the weekly real quick. So, I mean, I see the bearish argument technically. Man, this thing has been pretty wild, right? I am skeptical about the old small cap coins. Yeah, well, that makes sense. That makes sense. So it's certainly a gamble. The only thing you really have going your way here is the level. I mean, you're pretty much at it at the bottom, right? That's really the only thing you have going your way. So this is the kind of coin where maybe you throw. Yeah, I agree. Unless, well, remember what was a key driver in that time? We had stimulus checks being mailed to us, and we had a Fed that was pretty much at what, very low. I don't think they were still at zero at that time, but they were pretty low, right? So it's always possible if we can get that type of stuff going again. I mean, look, we're on our way to printing money and easy money again, so that's one factor. We just need some stimulus checks, or maybe they'll give us the UBI. Maybe we'll get that, which is kind of like a stimulus check, right? And then you could use that for altcoins. That may do it. Okay, all right, Grego. So yeah, I got a long list here. I'll try to get to that. So, but that's the only thing I could really say about this is it's a gamble. You understand that, but the only thing is you're at a level. You have that basically at zero level. So, right, how much lower can it go? It can go to zero, correct? But it may start. So, if you want to be more conservative with it, I would say wait until at least the resistance is broken, at least, right? And that's your first resistance right there. Right there. Okay. So you're looking at like the 30, I guess you could say 33 half. You want to make it maybe round it to 35 cents, something like that. If you're pushing above there, then maybe that's a time to say, all right, I'll take a position. Because at least you're now starting to clear resistance levels, at least. Right? That's a start. All right, so cool. Thanks for sharing. Let's take a look at Dogecoin. Okay. That's the weekly. All right, I'm going to go to the daily time frame here. All right, so the weekly had a signal, but the daily doesn't have anything on the Trade Scanner Pro. Let me also turn on the let me turn on these things, because when you have the Trade Scanner Pro, you got to turn these things on, so we have a sense of heads up and stuff like that in previous trades. Looks like there hasn't been a trade a while on this time frame. There hasn't been a trade in quite some time, right? A long time. So Doge, I mean, so you're rejecting that resistance. So who was asking? Like, he was asking, is this a fake out? Yes, that's a fake out. That's this situation right here. This is what I was describing with the bond chart, right? Like, this is what I'd be looking for on that bond chart, something like this, because you're testing a resistance. When you test a resistance, this is what you should be anticipating. Okay, the play is swing long large cap altcoins. Okay, Right. Well, that makes sense because they're probably going to be the first ones to get any benefit, right? Because altcoins, what value do they provide? They're many of them are meme coins. They're just worthless. They're not real assets. They're just jokes. They're financial jokes. That's what they are. Well, it was 1 to 2 weeks ago. Now we are at resistance. Right. Okay. So um, this situation, like on Doge, that this is the type of action I would have looked for, right, at that resistance. So now what? If you're looking to buy this thing, it's still showing signs of weakness. It's too early to buy, in my opinion. You want to find some support levels. This is your first support right here, right there. That's one support. In fact, let me start with the lower support, right? You have a consolidation back here. There's a relevant support back there, right? That is 20 cents, 20 and a half. The low is like 20.59. That's one level. And then you have this level. Notice I'm going way back, right? Notice I'm not just drawing them from here. I'm drawing them from back here because that highlights the relevance, the repetitive nature. That means there is something there. Someone is buying there for some reason, okay? Or whatever. So there's something happening there. So that would be your first support, which is around 24.75. So you could say around 24.75 or somewhere between there and 25 cents, something like that. This thing right now is at 26.44. So you got a little room to play with there. That level, that support level would be the first place to consider looking, right? It doesn't mean you jump in. It means, okay, now I start looking, right? Maybe it goes a little bit lower. Maybe it finds support somewhere inside this range. That's very possible because if you notice right here, we have a consolidation. If you notice that, right? And often midpoints of these consolidations, you'll find a support there, typically an active support. And that's because that's usually where the price spends the majority of its time. There's a lot of time spent there, which means there's a lot of open interest there, right? That's typically called the point of control when you're doing it, when you're using something like market profile. You'll notice consolidations, usually the midpoint, is where the point of control is, right? Because price spent the most time there. That's meaningful, right? So those are the levels I would be considering for Dogecoin. Does that make sense for longs? Otherwise, there's really nothing to do here. And if those supports break, let's say you get a buy signal at this first support and then it fails. It gives you the signal and then it turns around and goes the wrong way. And it's testing the next support and eventually it starts breaking these supports. That's the wrong thing. That I would give up on it. I would give up on it at that point because something that's strong should not do that. Something that's strong should not break continuous supports. Maybe it breaks a support, maybe a minor one or something, but it should not continue to break supports. It should find strength there because it's supposed to be strong. Does that make sense? Okay. All right, cool. Yeah, that makes sense, Kai. All right, so that's Dogecoin. Let me know if you have any questions about that. Now we have Intel. I have time. Let's do some Intel. Intel INTC, right? Market. It's a market stock. Let's go to the weekly time frame. So it's going to follow the general market. Oh man, this thing's not following the general market at all. The general market is on all-time highs. This thing is stuck. This thing is relatively weak. Okay. And I say that without even having to look at it very long. And look, the Trade Scanner Pro is even giving a red column, which is a heads up to go short. Intel, as a market stock, with the S&P at all-time highs, Intel should be at least pushing resistance levels. This is horrendous. I would not go near Intel based on this because it's relatively weak. When the S&P really pulls back, and we have not seen a pullback on the S&P, this thing is likely to just break supports and make new lows because it's relatively weak. This is the weekly time frame. Look at this. This thing sucks. I don't know what they're doing wrong. I guess AMD and everyone else is just beating them at their own game. I don't know. I don't follow Intel very closely, but relatively speaking, weak. So I wouldn't be looking to be, I would not be interested in longing this breakout. I would not be interested and buying that breakout. By the way, it's a resistance. It's an old support, new resistance. If anything, you should be thinking on the short side. If anything, that might be more aggressive, but this thing is not strong. All right, so that's Intel real quick. There's not much else to say about it. I don't know what they're doing wrong, but unless it breaks this resistance and starts to change its tune, but man, it's got to break that and it's got to break this one, and all while the S&P is making new high after new high after new high. This thing should be doing much better. This thing with the S&P and Nasdaq as strong as they are, what the F is going on here? I don't know. There's certainly a red flag. That's a red flag. Okay. So, I mean, look, let's compare it to like AMD, right? AMD, look, that's a little better. Okay. That's what Intel should look like. This is the weekly time frame, right? That's a little better. And I'm sure NVDA looks even better than that, but that's better. That's something it's not making new highs with the market, but it's got a bullish structure at least. Okay, while the market's making new highs. This still is relatively weak, but it's not as weak as Intel. All right. So anyway, okay, so that's that one. I'm going to move along here to some other requests, and then I'll wrap it up because I'm starting. I go over time and then I lose my voice and all that other stuff. So let's see here. Neo, we got Neo from Alex. Yeah, I think I'm going to jump to Neo. If you put a request and I skipped it, I apologize. I'm just going by what I could read here real quick. Intel could be an interesting turnaround story, but I want to know why it's so bad. Right, that's right. Well, often the technical picture is a reflection of poor fundamentals, right? So fundamentally, there may be something going on there that holds it back. I mean, look, Intel is Intel. They're not some startup, you know what I mean? But clearly there's something going wrong. And maybe at some point that it could be an opportunity for a big turnaround, possibly. But you want to know what the holdback is first. You need to know what the problem is. So if that problem is resolved, then Intel would probably be a good choice because it's a big name. Simply, it's a big name, right? So what's going on? You definitely want to know. But that is interesting. And that's often where investment opportunities come from. As you find like a big name that gets beat up for some reason, and then they fix whatever that reason is. Well, look, there's a long signal. The Trade Scanner Pro has a long signal on AMD on the daily time frame. That's interesting. And it was called like looks like maybe a week ago or something like that. So, all right, let's move along. I'm going to go to NIO, NIO. I believe this is the car stock, right? Someone mentioned TSLA. We'll take a look at that too. NIO. So let's go to the weekly. That's a good looking chart. Okay. All right. So going back, I mean, short term, that's a nice bullish structure. Definitely have a nice bullish structure there. All right. You would have to find out what or whom until. Yeah. Yeah. Find out what the Intel CEO, what or who they're doing. Something's going on there, man. So here is Neo, and while it looks interesting on the very short term, if you go back a bit on the weekly chart, you've just basically reached the top of its range, right? The top of its range. You also have a nice impulse structure here. 1, 2, 3, 4. You're in your fifth wave on the impulse structure here. I would be careful with this. This may be a good day trade choice, but as far as swing trade, I don't know. In investing, forget it. We're at a resistance, number one. I mean, maybe it breaks out. The Trade Scanner Pro is giving all this red, which is, short signal potential, right? It's a heads up for a short signal. So I would be careful with this one as a long. Also, the problem with something like this, again, S&P, you have to use the S&P as a gauge, even though this thing is probably not highly correlated to the S&P. S&P is on all-time highs, okay? So relatively speaking, or Nasdaq, whatever, you want to use the Nasdaq, this thing is like not even close, man. I mean, look at this. Look at this. It's not even close, right? These are the all-time highs. on this thing here. So no strength. There's really no strength. So don't be fooled by just a little blip. That's really all I'll say about that, right? So be careful with that. I would just be conservative with it, be selective with it. If anything, it's setting up for a short, not really a long. The long, if you want to wait for a long, at least wait for some kind of support level, or at least the midpoint, at least something like that, rather than taking all the risk in this situation, if that makes sense. All right, let's move along. Let's do TSLA. I mean, since they're both relative to each other here, what's going on here? So this guy bought $1 billion of his stock back or whatever. This is the weekly time frame. I mean, I don't know how they do it. I know they got a lot of problems, yet they always somehow come out ahead. Um, you have some resistance here. This looks like has it ever been higher than that? No. So you're messing around near sort of near the all-time highs. The all-time high is 488. You're at 410 right now. I mean, it can do it in a few days. That's pretty wild. So I don't know, but it's going vertical. Probably a lot of shorts were caught over here in this consolidation. So you're seeing that squeeze. It broke out of the consolidation. I don't know. This would be a good day trader. This is a great choice for day trader because it's strong, and you could look for a lot of intraday strength to maybe go along with that. But I don't know. Other than that, I wouldn't buy this thing. I wouldn't buy this thing as a swing trade. There's not much else. I don't see what else you can do with this. You're at a resistance area, so the risk is going to be very high. This is a great place to take profits if you have profits, in my opinion. There's no reason to sell at this moment, but that can change very quickly, as you know. I mean, look, today's candle, the market's closed. That's not a bearish pin bar, but it's almost a bearish. Like the candle isn't red, but if you break below that low, you close below that low tomorrow, that's certainly would not be a bullish sign. Make sense? And your first support on this stock, 354. That's your first support on this time frame, 354. So if you're interested in swing trades, that's where you'd be looking. All right, that's the number you have to wait for. All right, so okay, I think I got them all here. Yeah, XRP. Okay, let's see, XRP, and I'll wrap it up. I think I got them all. Okay, so John says here, rumor is it's going up. Is that what you said? Let me go back. Rumor for going up. I don't know what you say rumor. You shouldn't be following rumors, man. Okay. First of all, this is why we use charts. They help us. Excuse me. They help us avoid rumors, unless you're the guy starting the rumor. Going up, I don't know. I don't see it. So first of all, the Trade Scanner Pro called along not too long ago, and this thing is pulling back a bit toward that blue line, which is the entry price of $2.86. Thing is, it's in a consolidation, right? So I wouldn't say it's a rumor of going up. I would just say consolidation. You could see where your risk is defined here on this chart. You can use that range low as another possible area for a long if you're interested in a long. Oh, your wife's boyfriend always says XRP is the best Bitcoin. Ah, yeah, your wife's boyfriend. You can never beat that guy, man. Yeah, the wife's boyfriend. I like it. um, yeah, so it's a consolidation. There's no rumor here. I mean, I see drama with XRP all the time. I always see stuff on YouTube. Oh, XRP, the government is going to fund their deficit with XRP is going to save is going to balance the budget. Come on, man. Right? But I always see that nonsense with XRP. So, let's just look at this from a technical perspective. Right? You have the range low. It's definitely not bearish as far as the general structure. Let's go to the weekly time frame. I mean, look, You have bullish structures in play, okay? Higher lows followed by consolidation, right? Followed by higher low. So you're in another higher low consolidation. You have that going for you, but I would wait for a support level. I wouldn't be in a rush to buy this thing. And if it breaks that support, then the party's over. Then it changes the whole picture here, right? So if it can hold that blue line that I just drew there, if it holds that, then that would be an argument for strength at that point. And then you would look for it to hold, and then perhaps maybe over weeks after that, work its way up to new highs. The thing is, you know, XRP typically is driven by its own news, right? It's less sensitive to Bitcoin, I think. I'm sure there's some correlation, but it usually gets spiked on, some government, legal thing, some court report, whatever. Something happens legally and they get some kind of court case and blah, 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 big court drama, whatever. And then, XRP spikes. So, excuse me. So that's really the catalysts that are going to help you along. Just technically speaking, there's not much to say about this except wait for a pullback into this support area of $2.72, something like that. That's this blue line around here, something like that. Right now, if you buy this thing now, I mean, maybe it continues, but you're also taking the risk that it pulls back to the 272. Maybe you go in smaller now, because again, something like this is not really a good one for swing trades. This is really more of like an investment type of coin because it takes so long to do stuff, right? So I would look if you can't help yourself and you have to have some, you take small bites right now, like a very small bite. So if it continues to pull back, you don't care. And then when it gets to more attractive levels, then you can add to it. If it breaks those attractive levels, then you should probably hold off and not continue to add. Again, I can't give you advice, but this is how I would handle it. It breaks. You don't have to be in a hurry to sell because you shouldn't be over leveraged to begin with. You should be in smaller positions, and then you see if it stabilizes. If it can't stabilize, you certainly don't add to it, right? You start to figure out how you're going to get out, or whatever. Maybe just blow it out at that point. But you want to add to something that's working for you, not working against you. If it's working against you, then you add to a point. Like in this case, that point is that support level. If it breaks below that, you don't want to sit there and say, oh, it's cheaper, I'm just going to keep buying more and more and more, because it may work one time, but another, you get in the bad habit, and then you're going to start buying something that's on its way to zero, and you know how that goes, right? So that's why you have to give yourself some limitations, and really to add, you want to add when things are moving in your favor. But there is something for dollar cost averaging. You just have to do it in a responsible way, which is what I was describing here. That makes sense. All right. All right, you guys. So I'm going to leave you with that because otherwise I talk for hours and hours and hours, and I got to stop. So if you guys have any questions, let me know. You guys know I stream at this time. I pretty much do this on Mondays consistently, even though I got a few more people watching me, but not much. I've been doing this for years, man. But I know I'm not going to complain. I know what I'm doing wrong. So again, I appreciate you guys watching. If you want to press the like button and whatever, if you're new, you can subscribe, whatever. And at some point, I'll have some more content flowing through, but I'm just not there yet. All right. But anyway, so guys, if you have a question, you can send me an email or just join me here again next week and we'll do this again. All right. So I appreciate all of your participation and everything else. And I hope you found the stream helpful. So guys, enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.